Let's see here. I'm looking at euro pound for the pound jobs news. I'm also in a trade that I think is, I mean, it's lower probability for me technically. It's in dollar yen long. Uh, Essentially, I see it just coming up and testing the range. Very short trade, like 1.5 hour, if anything. Not looking to make a lot on it, but this is the news level from yesterday, and it's holding above the news level, so that's why I went long. Um, Even though I'm here to trade the pound dominantly, I can't ignore that. And I'm like looking at euro pound long. Should get in soonish. Um, so it's also not the biggest reward to risk ratio trade. Uh, Need to adjust this on my other charts. I'm already a little bit behind on entry on this one. If I wanted to go long, I should have entered already. Might need to wait for a pullback, and then I risk missing the trade if I do that. That's fine. So yeah, the entry should have happened right here. So I'm late by a minute. If you look, that's like a 1 minute candle going into the second minute. So that's unfortunate. I was distracted with my dollar yen trade, but my dollar yen trade's working. So it's not the end of the world, but it wasn't the trade that I necessarily planned to take right off the bat. I also look at pound dollar with this news. Um, it actually looks better to me, even though I'm sure euro pound will work as well in order for this trade to work. Uh, I like pound dollar better. The only reason why I feel hesitant about taking pound dollar is that then I'm in a pair that's correlated with my yen trade, and I typically would prefer that my trades be not correlated. Like it's a separate trading decision and idea if I do euro pound. So I have to balance the setup versus the context. So the context to me looks better on pound dollar. Uh, Setup looks better on pound dollar. But because I'm already in a dollar pair, I don't like the correlation because then if I'm wrong twice for sure. And I would rather not do that to myself. So that's that on that. I'll be looking for, I think, a 5 minute pullback on the euro pound. I like the decision of not being in a correlated pair. So, all right, looks like a 2 point. I think I can do this because it's a 4 hour level. Yeah, it's a 4 hour, 1 hour level. It's not really a daily level, but that's fine. It doesn't have to be. Let's see. All right. So my invalidation point would be here. It's also possible for me to get stopped out and then the trade to work as well. But I need to be a little bit tighter with my entries, especially on these corrective moves, even though I'm likely to get stopped out by going corrective. The reward to risk ratios on those trades aren't as good, and therefore I have to be a little bit more aggressive with, I guess, my stop placement as far as being tighter with it, or else then the trade's not going to pay out. So this is the 5-minute pullback I was waiting for. I like to give it a couple minutes so it comes down further on this 5-minute candle. And then on the 15, then that means it would just be rebalancing on the 15, still with this up move. 30-minute, anything else higher time frame doesn't really give us too much of a decision maker. I'm up like a quarter R on the dollar yen trade, almost like a third R. So that's doing what it's supposed to do. This is doing what it's supposed to do as well, right? This is the pullback I was, talking about. Like I said, oh, I got in late, so like I have to wait for this. So I wanted to come down to like at least here or even down here before entering. Now, the more patience I have with this, the better my reward to risk ratio will be if I'm right. So my goal is to try to keep my invalidation point the same across the time frames, and then execute as close to my invalidation point as possible. So then I get a higher payout when the trade does work. And then that should make up for, a lot of lost trades just by being a little bit more patient. So this is the point where I would understand getting into the trade. However, there's been so many times where I get in and then it goes down a little further, and then just in this distance would be like another R or not. So that and is a corrective move. So I really need to try to get a better location to that idea. Something I always tell myself too is to wait. You'll usually get a better price than you think. Sometimes that's not true, and I'm like remembering those experiences of like, oh, remember this trade you missed, or that trade you missed, or that trade you weren't aggressive enough about. But I'm already in a winning trade, and I'm up half bar on it, so I'm usually in a better position to combat the FOMO aspect of trading if I'm already up for the day, or if I'm in a winning trade. Then it allows me to yeah, it's in my location a little bit. It's in the level, but it's only at the start of the level. So like, because this is the start of the level, this is why it can take off. And, then I'm, SOL, and that trade, goes off without me. But by sacrificing and saying, you know what, I'm going to be this type of trader that waits for the deeper pullback for a better risk to reward ratio, then I have to remind myself that by being patient, I will pay myself more in dividends over a longer period of time. And like, let's say if I got in and I'm wrong, I'm going to get stopped out anyways. Like, if I'm already going to lose an R on this trade, I might as well try to get a better R out of it. Now, this may have been a mistake because of how it's set up. And like I said, that would have been the first area to entry. And then that was the pullback. So the pullback is already done. Now that's frustrating because it broke higher. Now, what I've seen before is that, it'll come up, test this, and then the pullback isn't finished yet. Like it's a deeper pullback. Um, I still like this idea to go long overall. I just have to wait for a bigger time frame pullback in order to do that. And that's still okay because if it pulls back on, 30-minute or the 15-minute at this point, because now we have a 15-minute pullback possible, um, actually shows me more income potential to the upside because if it comes back as a pullback, then the next candle will want to come up and retest the high of that new range on that given time frame. So this is not necessarily a bad thing, right? Could be, could not. Eh, I would be going long into this supply, right? So it's this supply that I'm banking on that gives me the reaction to then go long that I hope for the better reward to risk ratio that I would desire most. I'm almost up 1R on my dollar yen trade. That seems to be working out pretty well for the most part. Um, and because it's in one of those locations where it could turn on me, I almost want to take my 1R on it and go because of that pullback. I don't like this move that it could take down on the 15 and 30. I do not like that. Um, all right, usually when I'm hesitant about a move, I should typically get out. All right, so I'm making like 3/4 of an R on it. So yeah, see the selling pressure. I know it probably will continue long, but because this is more of a day two setup for me on this yen trade, uh, I'm not as comfortable holding on to it for as long. And sure enough, I would be giving back more profit already if I stayed in it. If I'm wrong. And that was like a short move because like I knew this area was the pound GDP level over here to the left, and it's just reacting off that level again. Now, the other thing is that that news level could become a bull bear area, so it could come back down into the level and work again. It can also come down, go through the level, and still work the way it's supposed to because it's a bull bear zone. All right, so now I'm out of that trade. Now, if I take the euro pound trade, um, and I'm wrong on it, I'll be like break even for the day, more or less. And that's a good thing. That's it's not bad. So on this pullback too, I would also be tighter with my stop placement on this because the direction is more clear. So I don't need to give as much wiggle room, I think. I'm still looking to take this long, but now I'm going to be like more aggressive with my stop placement, a little bit more aggressive. So just behind the 30 in 1 hour. So on this 15-minute pullback, I want it to come down into here and then get in it long once it comes and retests this area. That would be ideal. And as you see, as it pulls back more and gets closer to my invalidation point and my stop loss, my reward to risk ratio increases. So then I can do like a better profit target that's not as scary, right? Even if I go here and I enter now, it's still like a one-to-one trade, right? And then I'm not really concerned about this supply anymore because that's already my target area. So if I'm patient and then wait for it to come down here, this is going to be a 2R trade just from down here to up here, which is, I think, a lot more achievable and reasonable. And if this is just the momentum and it's pushing up and I miss it, then I missed it. I'll notate it and say, like, maybe I need to be a little bit more aggressive on this move, even though it's corrective. And I noticed that whenever it is a corrective move, like going against trend, I am definitely a lot more hesitant to take my new setup because I'm going against trend. And everything we know says to be like, what? Why are you going against trend? That doesn't make any sense. The other thing I've seen on this jobs trade is that because it's pound news, I've seen it, pick a direction. I've seen two things. I've seen it pick a direction during the Frankfurt Open, and then it pulls back to the origin of the move at London, and then continues with the direction that it chose. And then also I've seen it become the bull bear area where then the London position just flips it and then uses that level as a level to catapult to the short side with its impulse move. So that is another thing that could happen. So the idea would be is if I go long after a pullback, so if it comes back down to here and I go long and I get stopped out, I have to be prepared to look for the short. So those would be my two trading ideas. If I had taken it on the first 5-minute pullback, that barely would have been a 1.5 hour trade if I had decided to participate in it. This number will update. I pretty much broke even yesterday. I took 2 trades around the yen GDP after the fact. One was a loss, one was a 1 hour trade. So one win, one loss. Basically, my negative 10 cents is the spread. On my other accounts, I was actually up by like a couple bucks for the day. And of course, as the news information comes out for after midnight on my account, then this will update and show that I'm up for today by like 50 cents or whatever. I want to be risking more on this account eventually, but the problem is that this risk calculator does not calculate percentage. It's only doing volume. So like in order to do like real percentages that I want to do, I really want to risk like anywhere from $3 to $5 per trade, but I can't do that. I can only like I have to risk like $10 per trade in order to use the percentage the way that I want, which is unfortunate because on my other accounts, like I can do the percentage just fine and I can alter it because the account is bigger. I did not realize that my risk calculator would not be effective as much on the lower end account. And if I were to increase the percentage, it would suck because then I'm limiting myself to like 10 trades before this account is gone because I can only lose $100 on this account. Um, and that sucks because uh, if I have to increase my percentage um, to get to my goal faster, uh, I'm going to cause a lot more stress for myself because then I have way less trades that I'm able to take, and uh, my ability to recover would be lower. So ideally, I wanted to give myself anywhere between 20 to 30 trades before blowing up the account at any given point. And based off the risk calculator, I just can't do that. So until I get the account like scaled up to 4,000, I don't believe I'll be able to do regular percentages. And we'll just have to do like $1 trades until I get to the first stage, and this might take a while. And if I'm up like 50 bucks or something, and I give myself the wiggle room to increase my risk, I might do it just because I might get frustrated only doing like, $3 trades here, $4 trades there. And those are like 3, 4 hour trades because I'm only risking $1. So for me to make 4R, $4, like that's a good day. Like most traders, like, if you're not even consistent, you should be happy if you're even up like 2, 3R for the day, you know. I'm happy when I'm up 2, 3R for the day. So I'm gonna have to do that like 10, 20 times at least before I can scale this account up. So, and you guys should know my idea for the most part. I do want to go long, but I only want to go long when it pulls back into the low. And someone could say, "Oh, well, you're going against trend. That the trade is short, but the intraday trend is long. So the intraday for today is long. It's just anything from yesterday on the higher time frames. It's definitely short. But yeah, I would like for it to get into this area more or less, get in here, have my stop at this Tokyo low at the lowest. So risking, 5 pips to make like maybe 20 pips, or sorry, 10 pips. Um, it would be the goal, and then that would be a 2 hour trade just from down here to up here. And then that way I don't need it to break this supply in order to win, because I'm just, like I said, being more patient and trying to wait for the better trade. Now, if I'm wrong, there should be more than enough opportunity to go short. So if I get stopped out here, or even at the news level here, it'd be like, oh, okay, we're gonna make you think that your trade's working, and then we're gonna stop you out. And then this is the point where I would look to get in once it pulls back into that area to then go short. But that would be my second play. It looks like I'm getting the move down that I wanted, more or less. I gotta hang on a bit longer. Um, and I'm already up for the day, so I don't need to rush this. Just wait. So this is the move where the people that were first to enter, they needed to get out of their positions when it hit that supply because now they're already giving back half art, even if they got in at the like the best location. Um, and this is putting pressure on those people going long, and it's really to just put that squeeze on the buyers to get them out of their positions. If you're planning to go long, that's what's happening, right? If you're planning to go short, you shorted here already, and it's doing everything that you think it's supposed to do on a technical level, and you're right. Now, with my strategy, though, I'm saying that this is a news momentum shift, and this news shift is powerful enough to break all the trends that have been happening over the last, few days. And then if you're a confirmation trader, then yeah, you're barely getting into the short now, not realizing that you're going into fresh demand. Anyways, I would like this reward to risk ratio to get to about 1.8 or 2 before I enter. My target, like I said, is the high of the range and is in the supply that it should test. Like, so even if we were to go short, that's a bad location to go short. The better location is where my target is. Like if you went short here, then, to me that's risky because it can go up to here before having to commit back down to the short side. So there's room for it to go up, in my opinion. So if you're a confirmation trader, you're getting in short in that context because this would be your confirmation to get in short once it breaks here. And then, like for my idea to work better, it will make everyone think selling that, oh yeah, this is the way we want to go. Oh yeah, you're right. You know what you're doing. And then it hits that demand created by the news and then takes off long. Then everyone short gets stopped out. And the people that are long that were considered, not knowing what they're doing, I guess like myself, going against trend will have a better reward to risk ratio than going with the trend at that point. So sometimes I'll just take trades based off the fact that the reward to risk ratio is so good that like even if I'm wrong, it's worth taking because if I take that trade 5, 10 times, it's going to pay out. It's like going all in with pocket aces. It's just like, yeah, there's a good chance you could lose because probability can happen and anyone else can get lucky, with their kings or end up getting a straight or whatever. But that doesn't change the fact that, that your odds are good having pocket aces that you go all in typically every time pre-flop. So um, that to me is a good reward to risk ratio. If it's like a high probability trade on my news levels and it's a good reward to risk ratio, like my pot odds are good, then that's a trade to me worth taking. So I don't take trades just because they're moving or just because it seems like there's potential. Because if I don't get that good payout that I can see with my own eyes, you know, I need to know the size of the pot. And then I can be more committed about whatever decision I make with my risk. Hmm. So this is still entertaining the 30-minute pullback. And keep in mind, we can still get a 1 hour. Like at the London Open, or this just spaces out and then chooses a new direction after the London Open. That's definitely possible, which is why we're prepared to short it. Looks like my dollar yen trade was a good time to get out because it pulled back to where I got in on the first place. So like I would be break even on that trade if I didn't get out of it like I thought I should. So I listen to that inner voice as much as possible. All right, it's pushing. Oh, damn, it got to like 1 AR. Okay, I'm gonna get in because that's hitting my requirement. And this could be wrong, like I said, and that's fine. But this is the pullback I wanted. And if I lose on this, I'm break even. If I participate in the short afterwards, that's where my fate for the day is uncertain, where then I could be down 1 hour for the day if I don't time it right. But that's my plan, and I had to stick with it. Main reason for me doing this is to stick with my own plans, to hear myself say it, so then when it happens, I actually execute on it. It's to hold myself accountable more than anything else. I'm up half hour on it right now. And if you're like a confirmation seller, you're suffering the heat right now because you're short and it's hitting that demand like we talked about. All right, I'm up 2/3 R. And then like if I get to, and then it's easier for me to hit my desired target, which is, 2 to 3 R a day. If I do 2, 3 R a day, that means that I shouldn't have to work again ever in my life, right? Neither should you. So that's why like I try to be more patient with my trades because if I can get a better payout, I don't have to work as hard. I don't have to like make as many decisions. So if I can get to like at least 1.5 R, I'd be happy because then um, I'd finish with 2 R for the day, which is my initial goal. Is 2 R, 3 R if possible. Of course, there's days where I do a lot better than that. But those are usually, bigger interest rate moves or, bigger GDP moves that you guys see me do the better reward to risk ratio trades on. Just because there is more volatility and then there is more opportunity to get in at a good location if you know what you're looking for. All right, now I'm about break even on the trade, so then that's not good for me. Um, but that was the idea, you know. I got into the trade and I went into profit immediately because that is the idea. And anyone who got in on this pullback, they're getting stopped out or they're like debating whether or not they should stay in the position because they're at break even. So me getting in now versus getting in here, there's really not too much of a difference. The only difference is that the intraday direction is more prominent in the move that I'm getting in now versus the quick impulsive move that happened. So if I got in on this impulsive move, could have maybe got 1.5 hour on the tip. But that to me is definitely more risky because it's still technically within the range. At least with this trade, it had broken the range and then pulled back into the origin that it launched from. So we'll just see what happens. I'll try to post this as soon as possible once I'm done trading for this session. There's some news later at what 2 a.m. Pacific Standard Time that I probably will not trade because I don't find that move as significant, but there is a tradable news trade there. I just would prefer to trade this news versus that news. And then, of course, we have CAD CPI later today, which should be a good move in itself. I, hope to trade that, but I'll be mentoring a student, so and I won't be here at this location. So if I don't feel right, I don't feel comfortable usually trading off one screen. I would have to maybe just accept the fact that I'm not going to trade the US session today. And if I hit my target goal in this trade, I don't really need to either. All the US session would do is then give me just another opportunity to finish positive for the day if I was wrong on these couple trades that I took. All right, I'm back up to 3/4 of an hour profit. I'm up 1.5 hour for the day. I'm trying to go for a little bit better. And yeah, so wish me the best, guys. I wish you the best. Trade safe. And if this is something you want to do, maybe like hopefully I'll have a better invite to my Discord channel. So then, people who are discovering this on YouTube will have a means to attend these sessions live because I do them on Zoom live, and then I will post the recording on YouTube afterwards. So until I can figure out a better process for myself, that's how I've been doing it. All right, take care, guys. It's been fun.